So I wanted to share with you this stock. This is Sanghvi Movers. I bought this last week and I had to book a small loss on this trade. So let us discuss why I bought this stock and how did I execute the trade and why did I have to book a loss here. So if you see here, this stock is an uptrending stock. So the 50-day moving average, which is the blue line, is above the 150-day moving average, which is the green line. And this is above the 200-day moving average, which is the red line. So the blue, green, red, all are sloping up. It's a nice uptrending stock. The orange line is the 8-day exponential moving average. The purple line is the 21-day exponential moving average. So as you can see, the stock goes up, forms a base, then again goes up, forms another base. So I wanted to buy the stock as it was coming out of this base, just like it came out of this base like this. So I planned to buy the stock on this particular day. This is 22nd of April. So you can ignore these four candles because on 22nd of April, I did not know what was going to happen next. So let us focus on this particular candle only. So on this day, I was looking at the base. So this is point 1, this is the highest point in the base. Then this is point 2, which is the lowest point in the base. This is point 3, which is again the next highest point. And this is the point 4, which is the lowest point in the base. So you have two waves, one from here to here and one from here to here. So two waves I need to put on a trade. So the high of this candle, which is 1375, that becomes my buy price. So let me draw a line here. Let us give it yellow color and 1375. So that was my buying price. I was expecting the stock to break out on high volume at the yellow line so that I could buy on the yellow line. See what happened on that day. It touched the yellow line, came down, closed below the yellow line, and that too on low volume. So if you see here, this is volume, and the blue line here is the 50-day simple moving average of the volume. This is a daily time frame chart. Now, I had set a price alert on this day at the yellow line. So when it touched the yellow line, I received a notification on my mobile phone. So when that happens, I quickly go to the 15-minute chart because I can't execute the trade on the daily time frame because I don't know where it is going to close. So on the 15-minute time frame, I am waiting for a breakout candle. So let's go to the 15-minute chart of 22nd April. So I write 15 here. This is a 15-minute chart. Let's go to 22nd April. Yes. So this is the first candle. This is the second 15-minute candle. This is the third candle. It did not close above the yellow line. It closed at the yellow line. Finally, the fourth candle, which completed the first hour of the day, it closed 1 rupee above the yellow line. So this was my buy signal. I am waiting for a breakout. So that is why when this candle closed, I immediately bought the stock. Now, if you look at this candle, it is not a very convincing close above the yellow line. So instead of taking normal position, I took half position. My normal position on stocks is roughly 6.25%. So here I took half of that. So my position size on this stock was 3.125% of my entire stock portfolio. So very small amount. I'm not taking too much risk here. So 3.125% here. Now you might say, Rohit, why didn't you wait for the next candle? The next candle is a much more convincing close, right? See, at this point, I don't know what is going to happen next. So the next candle could be a 10% up candle. I don't know. The stock could shoot up 10% in 15 minutes. I have no idea what is going to happen next. My signal is if it closes above the yellow line, I have to buy. That is my rule. If I don't abide by my own rules, then I cannot measure my results correctly, right? So I bought here. So 1376, like almost the yellow line is my buy price. So now let us go back to the daily time frame because that is where we need to set our stop loss. So 1376 is my buy price. So I kept my stop loss at 8%. So 1376, I'm using this calculator. 1376 times 92%. So that's 1265. So 1265, let me give it red color. That's my stop loss. And my target is 16%. So 2 to 1 reward to risk ratio. So 1376 times 1.16. So 1596 is my target price. So let us give it green color. 1596. That's my target price. So if I look at this trade, that's my yellow line is my buy price approximately. Red line is my stop loss and green line is my profit target. Now I was expecting this stock to break out close somewhere here, like a nice 5-10% move on high volume. So this volume should have been above the blue line. So now at the end of the day, the price closes below yellow plus the volume closes below the blue line. Both are negative factors. So that is why I had to close the position. I had to take the loss because you never know. Tomorrow, next day, the stock could have closed down with a big red candle and taken out my stop loss, right? So let us see what is my loss here. My loss here is, so from the yellow line till the close, my stop loss, my loss is 1.64. That's the loss I took. Okay. Now, please understand that 1.64% loss is on a normal position, but I took half position, right? So my loss is not 1.64. My loss is half of 1.64, which is roughly 0.8% loss, correct? And if we have to measure the actual loss that I incurred, that would be 3.125%, which is my position size, multiplied by 1.64, which is the loss that I had to incur. So 3.125 multiplied by 1.64 percentage. So that's 0.05%. So I lost 0.05% of my overall portfolio, which is very, very, very small. Okay. So this is how I control my risk. I am not taking too much risk here. You might say, Rohit, 8% is too much. Okay, risk. Yes, 8% is too much, agreed, but 8% on what? 8% on position size, not 8% on portfolio. 8% on that too on half position, which I took here. So my total loss is 0.05% of my total portfolio, which is like minuscule, negligible, almost 0% loss. And imagine if I had not removed my position and the stock had taken out my stop loss on the next day, my loss would have been 4%, right? So the stop loss is 8% on full position. But since I have taken half position, my total loss is 4%, 4% on normal position, right? So that would have been a big loss for me. So I am always measuring my loss on a normal position. Okay, on a normal position, what is my loss? 4%, 8%, 1.64%, whatever. Okay. And then from there, I'm measuring how much is my loss on my total portfolio. So that is how I executed the trade and that is how I got out. So next time you see such pattern, doesn't mean that I don't take a trade. Next time I see this pattern, I'm again going to take the trade because next time a similar pattern would break out. Because in trading, not every breakout will be a clean breakout. Some breakouts might be fake outs or fake breakouts. So my job as a professional trader is to take the trade. If I don't take the trade, I might miss out on breakouts and I might catch the fake outs. That's a double disaster for me. So that is how I executed Sanghvi movers. Good trade. Even though I took a loss, my execution was perfect on this trade. Thank you so much. And if you have any questions regarding this trade, put the question in the description box. I will try to answer that question. Okay. Thank you so much.